What is going on, everybody? Welcome back to another video. I am sorry about the audio quality in this one, but this is one that I wanted to make for quite a while, and I think everybody's going to love this one. You've already seen the title, so let's go ahead and jump into this video. I've been getting dirty money. Okay, guys, Google. Why in the world would you want to buy tech when the stock market is going down, right? Like, it doesn't make any sense. Why would I ever be showing you guys this? It doesn't make any sense. Well, obviously, if we're going to look at the max chart, Google is very, very, very profitable. Now, with that being said, I do think that there is a couple of things that Google can do to stop it going down. Now, of course, evaluations are they change all the time, whether we're in a good market, bad market, so on and so forth. There's things you're not going to be able to do about that. But the one thing that everybody dogs on Google about is that there's no dividend. I want to show you how you can basically get a dividend without having an actual dividend. Now, of course, we go to year to date, it's not going to show really much. But if we go to the 1 year chart, obviously they're down about 40% or 35%. We're going to round, so that'll be 35.91. You can obviously see here on the screen is the actual percent. But what can we do with that? So obviously up in quite a bit there, but 1 year we've lost quite a bit. And they did this split now, so it's very, very manageable to buy shares now. And even if you're on Robinhood, buying partial shares. And I think this is something that if you can continue to buy stocks and let them add up, eventually you're going to get to this. So basically right now you would need $8,816. So I'm going to round up and say $8,817 because that's probably going to change. I'm hoping honestly that the market opens up red here on Sunday night for the futures markets and Monday morning, but we will see how that goes. But currently, so you're wondering how you're going to get a dividend out of this stock. Well, the one thing that nobody ever thinks about is the wheel strategy, or selling covered calls, basically. Now you're like, oh, that's options. I don't want to do that. Hear me out. Every big fund manager that manages money, including Warren Buffett, guys, that's right, the GOAT himself, Warren Buffett, does these in order to create cash flow from Google. Because, guys, you guys need cash flow in your stock. So what I'm going to show you is how you can produce it every month, and you're going to do very, very well on this as long as you have it. And the premiums are very good. So what we're going to do is we're going to open up the screen here. As you guys can see, I have Thinkorswim opened up. And we're going to go, and you can see here that it has the dates next to it. So this one opens up February 23rd. And this is 26 days out. This is just an example. So what I would do is, for instance, if we bought it at 88 basically right now, we obviously don't want to sell the 88 here because we're buying it for that. But what I do want to buy, or what I do want to sell, is what you can do is, if you are on most platforms, including TD Ameritrade, which is what I use a lot, up here is a probability of in the money. And you can go back and you can look at deltas or anything on this column. And you're going to notice they're pretty close here. So what I'm going to do is, this one says 8.89%. Well, I want to collect a little bit more premium since I own 100 shares of this. And I don't think that it's going to run up this much instantly. And I'm buying it at 88. And I think I can sell it. And I want to make $100 a month off my $8,800. Well, maybe I sell this one, and this one gives me $100 a month. And if it does get executed, I'm selling the stock for $96 at 100 shares. 88 minus 90, or 96 minus 88, guys. That's simple math. I mean, we can all do this. 96 minus 88, you're looking at $800 profit guaranteed, and you keep the 108 that you collected here. I'm not saying that this is where I would be doing it. I probably wouldn't be personally. For $8,800, I'm probably looking more around here. This $60 one, I'm probably going to put it out here for $65. Hopefully I get filled, because there is a spread quite a bit here on these. And hope for the best. Another one that you can do, and this is another option for this, and again, these are options, so you have to own the 100 shares unless you're doing a credit spread, and that's a whole nother video. We're not going to get into that. But this is basically how you're going to create a dividend. Something you can do if you want to hold Google forever. This is something that you can really do, and you think that the market's going to continue to go down, we can go out further and we can sell something here for a good chunk, like $100, or for $100. So you're basically making, what is that, 1,000 something dollars off of it. Just if it goes to 100 plus, you're gonna collect $400 from selling these. And then as these things decay, because guys, options decay, you don't have to wait until June 23rd or June 16th of 23. You're going to be able to go in here, buy it back. Maybe you make $100 the first month because you're at time decay and everything. Now, the reason why I don't do this option is time decay doesn't really kick in. Why I like staying at about a month out. I would do the 33 days out as well. I have no problem with this one, even though February is going to be a shorter month. You guys got to realize that when you're doing these. You can make $100 off of a 16%, or you can go out here and make $70 to $80 on a $100 one, being 12% out, which I think is a good deal for me. I would take that one and allow it to move. But that is how you're going to play it. And again, this is not something, if you're going to buy Google, you're not going to be buying it just to flip it and turn around and get out of it and pay capital gains and everything. You're looking on this one to buy it for a long-term hold and continue to cash flow off of it. Guys, remember, when you're doing a covered call on the wheel strategy, it's a win-win case scenario. You win if the stock goes up and hits your thing, so you're making money on that. You're collecting the premium completely still, and you're just selling your shares at that higher price point, which you're basically locking in your sell price, which is fine. Do something you are comfortable with. Highly recommended. Don't do it to where, and I think I need to make this point very clear here actually. If we buy it for 88, don't sell it for 87. Guys, don't sell it for 87. Now, would you technically make money on this because you're only going to lose $100 on the downside and you're going to collect $450 here? Yes, technically you are. You're going to take a little bit of a short-term loss maybe on the shares and make money, though, on the other side. Yes, but you run risk of getting executed on that. But if you come down here and you get these, you can collect, if you don't think it's going to go to 90, you can collect $300 for the month, basically. Or maybe, I think you can probably get a little bit more. The last was 310 here. And this is why I have this last column on here if you're looking at my layouts. Those are things that I think everybody can do. I love Google. Remember the business model of Google, guys. Not just the cash flow part of this, guys. They are web search. If you are going to look up anything on the internet, what do you say? Let me Google it. Guys, it's a great business. They make money off ads. They own YouTube. They own a bunch of other brands that you use every single day, guys. Google is one of the best businesses. And not only that, they can cut jobs. Now, I'm not saying that that's a great thing, that everybody should be cutting jobs. I do think that Google should be cutting some jobs in order to run leaner, less capital intensive, and be able to return more money to their shareholders as things continue to heat up in our markets for the downturn. With that being said, guys, thank you guys all for watching this video. I hope somebody got something out of this, and I will see you guys in the next video.